Good afternoon, dear viewers. In today's issue, we will touch not only on current economic news, but also analyze how bonds are holding steady during this turbulent time. Bonds are not just financial instruments, it's also a kind of patience test, isn't it? They may not bring you fabulous profits in a week, but in the long run, you definitely won't end up on the streets with a cardboard box. We'll look at why investors are paying attention to this market again, despite its low returns. Perhaps because they are tired of cryptocurrency surges, and maybe it's time for something more stable. But don't worry, we won't ignore cryptocurrency either, because the world of finance wouldn't be what it is without constant changes, doubts, and predictions. As always, we remember the words of good old Jeremy Siegel. Look to the future with confidence, but do not forget that every asset may be temporarily undervalued, especially if you have invested all your savings in it. But before diving into the world of stable bonds and unstable cryptocurrencies, let's talk a little bit about the current state of affairs. So hold on, we're going to have fun. And, as always, after a short introduction, we head into the heart of the financial storms, right on Wall Street. Our reporter is the same person who greets the stock exchange every morning like an old friend. We will now switch to his report so that you can find out how things are going in this exciting world of stock markets.
Thank you, moderator. We are right here on Wall Street, where you can see incredible fluctuations in economic indicators every day. Today is no exception. As always, the exchange is filled with bright events. And as always, with each such event, the number of people who lose hope for stability increases, and they start looking for their money under the pillow. Yesterday, the market surprised again. The shares of Company X fell by 10%, and this became a topic of discussion in all financial forums. But let's not forget about the main star of today, cryptocurrency. Yes, friends, the crypt has started to grow again, despite all the warnings that it is just a bubble ready to burst. Apparently, investors don't seem to be reading the news, and they continue to bet money on this unpredictable market anyway. And you know what? Maybe they're right. Isn't it? Who among us doesn't dream of getting rich fast? Who doesn't want to become a millionaire in just a week or two? As you can see, everything is as usual on these screens. Falls, growth, jumps. And here is our old friend Bitcoin, which continues its eternal upward and downward walk. It seems that this asset is not even thinking of stabilizing, and let's face it, maybe we're all just used to this game with fire. It would be fine if this currency wasn't so unstable that investors might soon require a passport for identification. Maybe it's time to register it as a separate country, and that's what's most interesting. Forecasts say that perhaps a new economic crisis awaits us. But, as Fed President Jerome Powell said recently, you shouldn't panic if something goes wrong. Yes, it's clear that an economic crisis is always a cause for concern. However, according to analysts, all these worries should not cause panic. You need to panic if you, like me, see utility bills on the table. Have you ever faced a situation where your utility bills exceed your salary? What a panic. So stay tuned. We'll keep an eye on developments on the stock exchange and in the cryptocurrency. But perhaps it's better to start looking at food stocks in case everything suddenly collapses. Yes, if there is a global economic crisis, at least let there be something to eat.
It really isn't that much fun on Wall Street these days. But let's look at it from the other side. As Janet Yellen said in an interview, it's impossible to predict exactly what will happen in a year or two, but you can prepare for changes in financial markets. And maybe she was right. You need to be prepared for anything, especially when the market is fluctuating as much as it has in recent weeks. But seriously, we will monitor the situation. And let's not forget that despite all the changes, there are tools that remain stable, no matter what we call them. We are talking about bonds that are attracting investors' attention again. They don't always bring fabulous profits, but they definitely won't let you wake up in the middle of the night in a cold sweat checking your investment page. As Warren Buffett wrote, "Never invest in something you don't understand." And here we come to the moment when bonds can really become a good alternative for those who do not like to take risks. The question is it worth investing in them now, or is it better to wait to avoid accidental losses?
Now let's talk about bonds. As Warren Buffett said in an interview, If you can't hold on to something for 10 years, you shouldn't buy it. And so bonds are exactly the kind of asset that you can be sure of in the long run. This is predictable and stable, unless, of course, you invest in an unreliable company. Today, we see that bonds are attracting attention again. And it seems that this is a good moment for those who do not like to take risks and do not dream of becoming a millionaire overnight, but just want their money to work a little. Of course, it's not as fast as the crypt or stocks, but at least it's calm. Do not forget that bonds are a long-term instrument, and those who choose them clearly understand that profits will come not immediately, but gradually. It's like saving in a bank, but with less risk. Is it worth investing in them? For some people, definitely, yes.
Here's the news, dear viewers. The stock exchange, cryptocurrencies, and bonds are all unpredictable and exciting. However, as our reporter said, it's better to have a pillow than worry about your investment portfolio. And this is probably the most important conclusion we can draw today. Keep following our news and we will definitely tell you how to survive the crisis and become the person who will raise his hand when everyone else is in a panic. Have a nice day and successful investments.